What is up, team? Welcome back. Welcome back. This episode is brought to you by PHEMEX Crypto Exchange. Make sure to hit that link in the description below where you can actually get a VIP 4 discount rate when you hit my link. And everybody that got this link yesterday and we're having errors, these errors have now been corrected and they are good to go and they are absolutely live for everybody to try again. And this reminds me, guys, make sure to take advantage of the algorithms that we're going to be launching here for automated trading using the PHEMEX platform within TradingView's Broker Connect partnership. Okay, guys, so make sure to get these automated trading systems that we've already presented to you. This is the last chance for last night's deals where they are off. I mean, they're off around 85 to 90% each. Okay, guys, link in the description below. Make sure to send me an email to ARCABULLS@gmail.com. And with your TradingView username. Everybody else that hasn't done it, make sure to do that, okay, guys? With that said, let's go ahead and get this thing started, okay, team? So I want to go ahead and talk to you about just a little bit of a distribution here that we found ourselves within. And this was what? Just through the, I think it was the last part of the equities market, right? We just closed equities and we started seeing kind of a decline into those last maybe 2 hours. And I want to say that is pertinent, right? And it is something that is natural as well. I don't want to make it seem like there's this huge, there's this huge problem going on. It's not like that. It's just that we closed some very particular time frames inside of the crypto world. So guys, here on the XRP 4-day time frame, you can see here that we have around 5 hours to close that 4-day time, right? We have the 3-day time frame still with 1 day to go, 2-day time frame 5 hours, and of course your daily time frame in 5 hours, right? So that presents a lot of volatility here, and that just means retraces, right? So if you're looking at, for example, this 4-day time, then roughly when you're at around 4 hours, 4.15 hours, there is a decline to decompress, right? It would decompress its own bar, guys. Okay, so number one, this probably went back to get the 50% of the prior bar before it moves up. So now it's starting to move up here within those 5 hours. So it's still okay. So here it is, guys. I do believe that if we have any more downside, then I'll give you those targets. But I do believe that this is now decompressing towards its 50%, which could be anywhere in the areas of around 219 to roughly this zone here, where is your 220s to 221. That kind of momentum gathers, and it does, give us higher probability for upside continuation from the smaller time frame, then cascading into the large ones all over again, right? So let's go ahead and kind of give those targets here. Take a look at your Tether dominance, and also take a look at maybe even the Ethereum asset and Bitcoin to determine the best type of analysis here for XRP. But before we do that, please do me the favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. My name is Arca, coming at you here. Let's see, Friday, November 28th. Happy Thanksgiving, guys, for the American friends. And it is 10:53 a.m. Pacific time. And we are here at spot price action on XRP 217. 420. So the 217 420 was earlier. I'm talking about within the same day. We were at around 227 578. So I got to take a look at the those time frames, like the 4-day. But we also have to be aware that there could be other time frames that are going to decompress alongside that. And if there is one, then we're about to find out exactly which one that could be. So you have a 9-day that's a day away, 10-day that's just around. Okay, man. So this is a new 10-day time. It opened around 2-3 days ago, and certainly this can distribute to around 213.837 ish. I'm not going to say that it is just yet, though. So let's not come into any conclusions just yet. I just want to know if we have any of those, closer proximity timeframes here for statistical. I can give you a statistical resolution on it, is really what I'm trying to say. So 15, I think we had some in here. 16-day has just a little bit to go, right? And I'm looking at these odd timeframes because institutionally, You know, we want to be able to pick out what would be the biggest advantage, right, guys? And it's critical to observe things like this because no one really does, right? But they absolutely would. 22-day time frame has 20 minutes to 20 days to kind of close here. We can see that the 50% retrace on this. Okay, yeah, so it closed at its 50%. Downside would be pertinent to the 4-day time frame, 50% decompression, and also your daily time frame, your 2-day, all those. Okay, and now that this, guys, it may be actually temporary, but it is kind of a large time frame, so that temporary has has some reach. I want you to kind of be aware of that first, right? So 24-day time frame has 4 days to close. That could start decompressing now. Sure, that's okay. So other than that, something that just has hours to close, I'm not really seeing it here just yet, right, guys? So if we're talking about a monthly close, which is about to happen, just around 2 days, 6 hours, this would be decompressing soon. And decompression on this would actually be to its 50% and then back to the upside based on its current trend from down here at 181. So the 50% area on this would be right around, we talked about this just a little bit earlier ago, maybe a potential 221 area to then cascade the immediate short term, one time frame at a time. So if we have, now that we're here in this macro time frame, we can absolutely put together your I guess the larger pivots, right? The ones that would absolutely matter more than anything else. So yeah, it looks like it would be right around this target here, right in between these two, right? Because they're confluent to each other. So let's go ahead and mark off this 214. Yeah, 214,448, just like this. And should there be continuation to the downside? Absolutely, absolutely. We were talking about these targets already, right? That 207 to maybe now we can see that there could be a blockage from getting down to that 207. But honestly speaking, guys, that becomes a range, a zone for us to observe that downside. Okay, so let's put this just about here in these areas. You're going to probably be surprised that they're going to have a lot to do with our with the closures of our more immediate short terms, like the 4 hour, like the 4-day and all that stuff. So let's just go ahead and kind of nail this target as close as we can. Okay, team. So here we go. This is going to be the upper one since we're coming down with price. And should there be a level to prevent this target of 214.48, most certainly right about here at 214.770, we would favor guys. We have to favor tangible price, right? Whatever is there, actual live price. So, okay. And so one more time on the monthly time frame, this would give us, the upside. I think that we just resisted. Yeah, we just resisted there. I think it was 221, right? So this thing is marking off almost 220 there. Perfect. Okay. So it did 50%, but there are other time frames that still need to retrace towards that upside. And that's where things get interesting. That's where things get really interesting. Your macro time frames, guys. Like, for example, this 6-month time frame that's closing in 1 month, 4 days. Look at the decompression on this bar. So this would technically touch supports, right? The ones that we're looking at, look at where it is, right? This is your this is 2 6-month candles, and they're confluent to each other and right at the top of the price action. So this would probably, highly likely, come back down towards that 208, 207, and from there, consolidate a little bit, resist at those relative ranges and all that good stuff, right? And then decompress to the 50% from which it's located at around 262, this bar, okay? We still have, and a very rare thing happening right now, guys, is that we do have your, 262 to 248, actually, 247,605. We still have the bi-yearly, the 4-year, and also the 8-year candles closing, guys. So that's also kind of a thing that we should absolutely look out for. So if it is a 4-year time frame, it would most certainly be down from here all the way up to this point here. And that 50% of that 4-year is located right about this point, which is very close to the target that we're at right now. 203, maybe potentials of a low of what was it for us? 206, 207, whatever this is down here. Very, very cool stuff. Now, the 8-year time frame, because we're so close to all this, guys, this matters right now. You know what I mean? We could do I think it would be down from here, guys. So I'm not sure if it's going to create a lower target for this, of which we probably already reached. So this is the high of the 8-year time, and this target here would be roughly around 198, and it's magically right at this top side here, which we've touched 197, 198 so many times. Okay, guys, quick reminder, please remember that if when you join the ARCABULLS Trading Team, there is somebody to approach you with a DM saying, hey, I'm Arca, you know, turn off your DMs and welcome to the team. You can rest assured that is certainly and absolutely not me. I will never come up to you first, friend request you first, or send you a message of any kind first ever. Okay, guys, please be safe with that. And I think everything's good. So, yeah, guys, I think that the 8-year retrace is done on this, the bi-yearly, the 4-year, and the yearly now is the one to finish off. So before the end of the year, we would already start, statistically speaking, an upside to around 261, 262 level, with a range of around 246.62 at the top side of this range right there. Okay, guys, so for the meantime, I think there is distribution to be had, and I think we could also see it through the means of volatility from the more immediate short term. So let's just validate that before we can finish off this fine video here, right? And everything will be good. Let's see from where we're facing this downside from. Okay, yeah, there we go. Right. So look at the volatility, right, guys? Remember, we are accelerating here. We are certainly looking at downside at this point. So accelerating with a downside, that just means exactly that, right? So we have potential risk for a continuation to the downside. The hourly time frame just opened, right? And this is giving us a potential upside, but that's just because the bi-hourly time frame is trying to get towards its 50%. So it doesn't have to, right? It doesn't have to, but I would say that there's a resistance level right about this area here for the immediate short-term traders, right? For the people that need to know where this thing is going, like just now, right? This would be your resistance top, just roughly at around 218.46, and it already resisted from a nice area of around 217.9, which is all this stuff here. It is very nice. Should there be a continuation to the upside and one more to give us a little peekaboo up there, I would say it would be right around this target here, 219.525 at its highest point, and this here would start really a distribution into first bouncing from this area of around 214.735. But let's find out what that low is. Okay, guys, so let's see. 3-hour time frame still proves downside. We're looking at 56 minutes to closing a 4-hour with a upside, outside red bar on the upside, and it is a bearish engulfing as well. Still downside into the 4-hour. 6-hour time frame looking like it still has posturing to the downside. Critical contraction. So as soon as this thing starts dropping, volatility will certainly start to increase. 8-hour time frame downside with critical contraction, potential closure in 4 hours 55 minutes. That's a bearish engulfing on the top side as well, validated as soon as the closure happens. Downside into the 12-hour time frame, volatility will likely start to. Oh, and also 4 hours and 55 minutes to close. This would start to decompress roughly at around maybe 45 minutes, 30 minutes to the close. That would be upward in 50% or 30% of this would be right within the same areas that we talked about for entry. Let's see, daily time frame, still on a downside and potentially closing a true red outside bar here, guys. Yeah, this would close a true red outside bar. And pullbacks still around the same area here. I mean, I guess I can give you guys a potential top side for liquidity, but it may not reach it. 224.16. I'm going to go ahead and put that there. 220.416 is what I just said. Okay, guys. By daily time frame, but let me see the daily. Sorry. Yeah, man, guys, this is really all of this. It's still downside. Okay, I mean, it is what it is, right? We just gotta follow data, and that's all. We're looking for the upside bias, like the absolute upside bias. And this bi-daily time frame is kinked, and it's closing in 5 hours red. Man. Okay, a 3-day time frame. No, this is still likely going to go down more. 5-day time frame, almost there. Okay, downside into the weekly. What? Okay, there we go. Wow, bi-weekly worth of downside, and this would mean that the bi-weekly is a 50% retrace before continuing to the downside. Wow, guys. This 50% of the bi-weekly time frame would have been roughly at around 218.67. It reached 228. This would continue to the downside, and let's just see how much though, right? It may not be that much. So bi-weekly time frame has an ATR of, where is our data cell? There we go. We have a current ATR of around 60 cents. That puts us at an ATR low of around, wow, 145. Okay, there is something obviously going on here, and I'm not sure why it's showing such targets like that. But if I were to able to just kind of look back a little bit, I guess, and find if there is an actual pivot somewhere. It's just this bi-daily, guys. It's kinked. You know, it's absolutely kinked. I may have to use it. 4 hours daily. And this is 5 hours. Yeah, 4 to 5 hours on both the daily and, oh man, I hate it when this happens. Okay. All right. The pullback into the targets, that's the average time. So the low on the, let's see, the low on the 2-day would be, let's see, we're going to figure this out, guys. 199, and the daily time frame is already an upside pivot 2 over, and that this would have a low of about 204, and I'm signaling the potentials of let's see, 207,992. Okay, your current ATR low would be 204,578, so around that at the 205. Yeah, okay, fine. Fair enough. The most influent area here for liquidity bottoms would be 206,009. Of course, it would be. And if there is any time frame that can prevent this from happening, it would maybe. Dang, guys, it would actually maybe be the 4-hour time, the 4-day time, because this one has. I got to stick to it. I'm sticking to it. Your daily time frame, guys. Your daily time frame would be the only one to really kind of save this. But it would really have to pick up some volume from this down here, right? Your 206 to these areas of around 207,992, 208,998. It really needs to bounce here hard so that the immediate short-term volatility starts to cascade from the smaller time frames into the larger time frames with enough thrust. If it doesn't do that, then we validate a continuation for the downside, which would probably bring you up to resist at levels of, just around your 214 into the top sides of, it's roughly 215 to around 218, 218, bounce back, and then this would, very, very highly likely continue towards the downside and put us at a different level. Man, team, you need to be careful here, okay? I'm catching a downside here that's speeding up. Please be careful. And it is kind of showing also in the USDT asset. Guys, I know this video is kind of long here. We've already been going for 19 minutes. Hit those ATWs in the chat and let me know that you have still been here learning with me, guys. I'm really trying to make sure that I can be as accurate as I can be for you. Okay, guys. So, yeah, USDT Tether dominance showing some continuation to the upside, recapturing this this bottom side here. So it's already trying to make its next move up. Man, yeah, this was a fake out here on the channel, right? This is going to be 2 times the length of this. So yeah, guys, the next resistance we're going for 6.096% to around 6.128%. That definitely introduces continuation to the downside in overall crypto. Okay, like overall, all of crypto. So yeah, just heads up with the opportunities for you to retrace into the targets that you would like to get out on, guys. But if I am talking about immediate short term upside, then yeah, maybe into the 218 446 to 220 416, and that would be the target to potentially risk off for now. I apologize, team. I really do, right? I just don't know how else to tell you. So keep your eyes and ears peeled on this, okay, guys? But this is potentially looking bullish from the immediate short term. Your Tether, yeah, it's already, look at this, guys. We're already thrusting towards the upside, accelerating as well, right? 3-minute time frame is starting to shift for the downside. Volatility is expanding. There's still, yeah, guys, there's still more. Remember that the statistics are leading towards the 145, but there are plenty of levels here that have kind of combated that before, and some that for example, what can undo an area of like 145 or whatever is just dependent on how big the bounce was. So for example, if we are to drop into critical targets, then these lows here of around 206 maybe put you into these lows of around roughly at an average of about 198. Why 198 though? Because 198 or 193, 190, whatever that is, have been responsible for some of the biggest jumps that this phase has had, psychologically speaking, reaching things like this here at the 198 target of December 30th, 2024. We are about to be in December of 2025. So that's more of a psychological reason to bounce from this target down here all the way, 198, right? All the way to 341, which before, right, it kind of happened similarly like that too. Well, yes, we've already done that before. We've already gone all the way, all the way down here to 182. So why didn't we explode all the way up there, right? I know the questions, guys. This may be also a fake out. Take a look at how the iteration happened the last time, right? They almost look mirrored right here, right? You have your potentials of an inverse head and shoulders like this, spike down, inverse head and shoulders. This could be your shoulder here. This could be your head, potential other shoulder, and continue, right? Who knows, guys? But there is some rhyming with the way that this is moving down and the way that this is moving down on a descending formation. So there, guys, I didn't realize here that I was showing you the wrong chart. My goodness. So yeah, I'm just gonna come back into this here, guys, and just kind of show you briefly, real quick. These lows of around your 180, what is it? Your 180s, right? This has this huge explosion, right? Huge explosion here. And you also have this gigantic explosion from the 199 all the way up to that 341. So this is the reason why. And this one here also, right, that those could be the reasons that can give you a further upside and kind of have a huge dismissal of statistics. That's because then you enter a different type of statistic, right? What are the probabilities of psychology taking over your numbers-based statistic here, your sample base instead? So that's presently what I'm talking about, team. So if there is a chance of this, right, you have this weird, really sharp upside shoulder here, right, for that head and shoulders, which is peak here, down into the head right over here, and then you start creating the other shoulder, and then you go. So it's just like this, right over here. So you have that peak here, create that shoulder, you have the head, potential downside for the other shoulder, and you continue. So there is kind of a repeating fractal in this. Okay, guys, so that's presently what I'm talking about here. There may be a bear trap in this, but it's just very dangerous. It does not have to happen like this, okay, guys? But psychologically speaking, you know, we've created some pretty intense bounces from these zones. Okay, so just heads up, I think the next zone to observe would be the bottom side of this inverse head and shoulders, roughly around there. So if it does happen, right, I think that we may have already kind of figured that. And what do you know? There is the head and shoulders bottom, and we talked about I was just about to make this zone here. So I think that there might be a bear trap around these targets down here, guys. That's going to be an overall 208,998, 207,922. Okay, guys, and then your liquidity bottom would be your 206,009, and I'm looking at it from this side of the screen, right on the right here. Heads up, team. Please be very careful, and we will speak. Yeah, guys. If any questions or concerns, you let me know, and we'll speak very, very, very scary, Larry, later and later. Thanks, team. Adios. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very good rest of your night and or day. And I will catch you at the bell on Monday. Adios, team. Oh, yeah.